Well, thank you, Mr. Chairman. It's my pleasure to introduce Gary Marowske, president of Flame Furnace in Warren, Michigan. Come a long ways. His company is founded in 1949. Still in business. That's a great thing. Currently has 70 employees, hopefully more in the near future. And Flame Furnace is one of the leading HVAC residential services in the Detroit metro area. So welcome to our committee.
Thank you very much. Thank you. And thank you, Chairman Walsh, and again, Ranking Member Schrader. And I'll flip through my comments. I appreciate the opportunity to testify before you here this morning. Again, my name is Gary Marowske, and I'm the president of Flame Heating, Cooling, Plumbing, and Electrical in Warren, Michigan. We supply services in heating, cooling, plumbing, and indoor air quality equipment throughout southeastern Michigan. Like a lot of small businesses in the HVACR industry, Flame is a family-owned company started in 1949 by my father, Bob Marowske, from a humble beginning. We've been blessed and grown steadily, and today we employ, it's actually about 75 now, we screwed up on what we gave you, workers. We have a fleet of more than 60 vehicles and have installed over 75,000 comfort systems over the last 60 years. I'm a proud member of the Air Conditioning Contractors of America, of where I'm the chairman of the Government Relations Committee. And the ACCA's member companies epitomize the spirit and entrepreneurship of America's small businesses. Nearly 3/4 of ACCA member companies have fewer than 25 employees, and 92% have fewer than 100 employees. Most start out with technical skills, a truck, and the American dream is they're going to create their own business. It is my honor and privilege to give voice to the small business contractors of the heating, ventilating, air conditioning, refrigeration industry on the ongoing and much-needed debate about tax reform. The contribution of small businesses to our economy is often overlooked, but companies like mine employ 70% of the American workforce and are the chief source of new jobs in an economic recovery. I wholeheartedly agree that tax reform must address the individual rates because of their impact on small businesses. Not everyone understands that sole proprietors, partners, and S-corps shareholders pay taxes on business income through individual tax rates. Flame Furnace is organized as an S-corp, as are most of the small businesses in the specialty construction trades, in part because it protects the owners and shareholders from business liabilities and debts. And on the debt part, 95% of all small business owners must also personally guarantee all bank debt, vehicle leases, office equipment, etc. And it also facilitates, as a sub-S, an easy transfer of ownership through stock, through family members, or whomever you'd like to pass it on. Changes to the individual tax rates have a direct impact on pass-through entities, so Congress should be very careful before enacting any tax reform proposals that tinker with the individual tax rates. In 2009, only 7% of Federal tax revenue came from the income taxes paid directly by C-corps, what most people assume a corporation to be. Individual income tax revenue, including that from all the pass-through businesses, was 44% of the Federal tax revenue in 2009. Unfortunately, it's impossible to say exactly how much came from income tax on the pass-through companies. As you contemplate changes to individual rates in the corporate and international tax codes, I want to take this opportunity to point out that America's small businesses are looking for a simple, rational, permanent tax code that will encourage prosperity, foster job creation. The tax code is a powerful tool that can affect individual corporate behaviors in a way that advance beneficial public policies, like allowing homeowners to take a deduction on their mortgage interest, permitting small businesses such as my company to use enhanced Section 179 expensing limits and bonus depreciation. These incentives work, and my company and thousands of ACCA companies have used them to buy new trucks, office equipment, other investments. An example is the homeowner's 25C residential energy efficiency tax credit for installing qualified high-efficiency furnaces, boilers, air conditioners, etc. The 25C tax credits are easy to take advantage of, and they do not favor the wealthy according to IRS statistics. Fully, 93% of tax credit claims under 25C and 25D for solar, geo, wind, and photovoltaic properties were made by taxpayers who have an adjusted gross income of no more than $200,000, which is indicative of a middle-class tax. The 25C tax credits highlight how a simple tax incentive can help individuals and small businesses create an economic benefit. Americans spent more than $25 billion on energy improvements to their homes that qualified for the tax credits. Now consider the National Association of Home Builders. It estimates every $100,000 in remodeling expenditures generates 1.11 new jobs. Congress needs to extend the 25C tax credits beyond their expiration at the end of this year. Restore the tax value to $1,500 is my association's. My personal opinion is if we want to drive individual behavior, save energy, create economic activity, we ought to raise the credit to $5,000, and you'll see more than a payback on that. Another important change to the tax code would be to bring the depreciation schedules for HVACR equipment and other building components more in line with reality. According to the tax code, commercial HVACR equipment must be depreciated over 39 years. And if any of you own a building, you know that the air conditioner doesn't last 39 years. This would include doctor's offices, homes, small businesses, car dealerships. That type of building would this would apply to. Let me close by saying the small business community needs certainty. We've all applauded the repeal of the Form 1099 filing provision in April. We're hopeful that the Senate can pass a repeal the 3% withholding tax on government contracts, but the effort to pass these two small business priorities highlights the piecemeal and short-term approach Congress has taken with regard to the tax code. Last year extended more than 60 tax incentives that benefited individuals and small businesses just 2 weeks before they were set to expire. And that makes it tough for planning for a small business, for advertising, marketing. Included in the bill were a temporary extension of the Bush tax cuts, short-term estate tax reduction, a short-term extension of bonus depreciation, and modification to Section 179 expensing rules, a one-year extension of the alternative minimum tax patch, and a temporary extension of the residential energy tax credits described above. While extension of these tax incentives is greatly appreciated, the timing and nature of their extension make it very difficult for businesses to make business decisions. America's small business owners are crippled by worried about what may or may not happen next year. By sending the right signals to America's small businesses, Congress can eliminate the fear of the unknown, and I can assure you American small businesses will rise up and create new jobs. With that, I conclude my comments and will be happy to answer any questions, and thank you again for the opportunity to testify. I hope I didn't put you to sleep.
Not even close.